What's up, traders? Happy Halloween and welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course check in on our broad market, notably some monthly charts there. We have our core list of companies that we're always watching, and this week I've got 4 trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Before we dive into the charts, I would just remind you that linked down below in the description are a couple of free resources, a couple of paid ones as well, so take the time and see if there's anything down there that interests you, notably the Swing Trade newsletter. That's free. The Discord is free as well. Some of our more popular resources from down below. So without further ado, let's jump right into the charts. So starting out on our SPY monthly chart, talking about candle structure and location as we always do. For structure, an incredibly bullish candle here. Let's talk about how we actually closed at the all-time highs. Okay, so that for one is bullish, but more importantly, let's take a look even closer at the lower wick down below. If you think about where we are in relationship to the prior month's range, that lower wick technically took a little dip down below the prior month's low. So this is important to at least recognize, because the sellers did have the opportunity over the course of October, as noted by this lower wick here, to take us lower for a continuation month. However, how did it unfold? I mean, obviously we know the story. We had a monster rally to the upside and we've closed at all-time highs. So again, it's these little nuances that you can pick up in terms of location and structure, which are really important to acknowledge. So in my estimation, there really isn't a stronger seller present inside of this market. If there were, they would have seen the break of the prior month's low. Maybe there was chance for it to go lower. It just didn't happen. In terms of volume, volume was on par. Make pretend with me for a second and extend this to the left. It's on par with all of this grindy nature that we've seen to the upside. So nothing really to read into from a volume perspective. The last thing I would say is that although this isn't a true engulfing candle, we did not open below the prior month's low, I would treat it as the same in terms of psychology, again, all because of what this lower wick represents and the fact that we broke the low but rebounded to close at the all-time highs. So from a monthly perspective, an incredibly bullish bar here. Let's drill down one time frame to the weekly perspective, okay? And zooming in a little bit, I think that is the time frame we really want to concern ourselves with. Again, in talking about candle structure and location, same thing holds true. Literally the same thing. We can see that lower wick here, although it wasn't breaking the prior week's low, it was dipping into the range. So the way you think about this is that we could have had the opportunity for an inside bar trading inside of this range here. However, it was used as support. It was also the prior all-time high, right? Used that as support, and we went higher, closing at the new all-time high. So again, from a structural and location perspective, an incredibly bullish candle. The other thing I would encourage us to continue to monitor, which we've been, watching for weeks and weeks and weeks now, is this is the dominant support trend line at this point in time. Our latest interaction was bought. Obviously, it resolved to the upside. And the thing that maybe not so many people are talking about just yet is the resistance trend line, okay? So it's not like this thing has just magically gone away. It's actually gotten higher. So it does leave a little bit more room to the upside. So that number, just so you're aware, if I hover the cursor over where this weekly bar should essentially form, we're looking at 369. Let's call it 368 to 369 to give it about $1 worth of wiggle room there. That is where the overhead resistance trend line is going to come into play. And that would just be an area where I monitor. Again, you're not trying to time a pullback, but you just monitor and dial back the aggressiveness of your long-sided trades. Notice that I didn't say we have to get there. It's if we find ourselves in a situation where we are trading here, that's how I'm going to adjust my sort of psychology and saying, you know what, I'm going to dial it back on the longs, not necessarily look for a short. I'm not trying to short blindly up here at the highs, but just be a little bit more conservative, right? Very important how you think about these things and the words you use. Again, there's no guarantees in the market. It's just if we find ourselves here, that's how I will be thinking from the weekly perspective. Let's drill down, and also, I guess before we drill down to the daily, let's check in on volume as well. Slight increase in volume. I'm not going to say it's anything dramatic like what we saw in this section of the chart. However, it is noteworthy that the volume here did increase from the prior week's candle. So more volume was committed here as opposed to in that prior week's range right there. Just another data point to sort of add to the ongoing list of things that we're watching. Let's drill down now to the daily time frame chart and talk about tradable levels into the upcoming week. So First thing I would point out is that I do think that the market is searching for a little bit of balance up here. If you watch the midweek market update on Wednesday, you basically know that an acceptable range for balance to occur would be in here. So although yes, on Friday we are poking our heads up and out of this, essentially closing at all-time highs, I would not be surprised if the market balances out in this area. Now, why did we choose this area? It's simply the place where we've already started to see a little bit of balance. Notice that in these 4 days I've just highlighted, 1, 2, 3, and 4, that's where we've already seen the most overlap in terms of trading range. You could say the same thing about the last 4 or 5 days of trade, essentially this entire week, right? We have this to this. This was obviously above, but that kind of puts into play a high and a low. Wednesday was certainly smack in the middle, Thursday towards the upper half, and Friday as well towards the upper half, closing outside. So the market is trying to balance, and I would say after a period of excess, that's expected. So for me, into the blue sky territories, we know where that weekly resistance trend line is, closer to that 468, but as of right now, it's just $1.50 until we get there. The upside is easy. If it wants to consolidate, I'm fine and content with the market playing around in this range here, in which case we'll just take day trades off the low end of the range to the top end of the range. Even if it wants to come down to this gap at the 451, that would still be acceptable in my estimation. The time where we're going to get a little bit, I don't want to say scared, but the time where we want to prepare for a bit further of a pullback is if the tape speeds up, notably on November 3rd. Okay, so why am I saying November 3rd? That's going to be an FOMC meeting. And in this FOMC meeting, we will be getting the information from the Fed, hopefully, on when the taper will begin, when they're anticipating it to end. They've stated that, it's going to begin sometime in November, and it's likely going to end sometime mid-2022. So these are important things to note, right? Because obviously after the taper ends, that gives them a chance to increase our interest rates. And what does not like interest rate increases? Obviously the QQQ, which we'll discuss in just a moment, but that does have a significant impact, tech does at least, inside of the SPY. So on Wednesday, you should be very cautious if the tape starts to speed up, if we come into 451 and we start to see a massive liquidation break. Don't be surprised if that happens. We have levels to pay attention to. Firstly, the gap underneath here, that has not changed. The 50 SMA after that, and then the next gap between 443.25 and 442.61. So we have levels to pay attention to, and we have a date where there may be some sort of reaction. Don't act as if this came out of the blue. Please be prepared for this. Position yourself accordingly, whether or not that's putting on some defensive plays or just saying, you know what, I'm going to sit out of the market on that November 3rd date at 2 p.m. when the FOMC announcement actually occurs. We don't know how the market's going to react. However, we have levels to be paying attention to, and hopefully this analysis of the S&P was thorough enough where you feel comfortable knowing where, the market may come into if there's going to be a liquidation break, or if there's going to be a massive rally, where should we start being on the lookout for any sort of resistance. So let's move along here and get into the Qs. Obviously, these guys will be impacted by the taper and then subsequently the rising rates the most. So zooming in on the monthly bar, we're back on the monthly chart. I would point out the same exact thing as what we said on the S&Ps. Obviously, again, it's not a true engulfing pattern. However, the lower wick would indicate a very similar sort of psychology. Same thing, closing above the prior month's high into blue sky territories, and essentially the Qs have caught up to the S&P. Remember that they were lagging a little bit in prior videos. Remember that we were comparing resistance trend lines, 50 SMAs. Now they're both sitting at all-time highs, which is bullish, right? They're both back in sync. In terms of volume, again, play, make, pretend, extend that to the left, on par or maybe slightly above average for what we've seen in this section of the chart right here. So nothing really to read into too much from a volume perspective. Let's drill down to the weekly now. And coming in once again, just like we did in the S&Ps, obviously using the top end of the prior range, weekly range as support, moved higher, broke into blue sky territories. The difference here being is that obviously, the S&Ps used this. That was essentially this candle here, and we went higher. But obviously, again, a break into blue sky territories and a close inside of blue sky territories and not back down underneath the range is a bullish thing. Obviously, again, the caveat is that November 3rd is going to be that date where you need to pay attention. Are we going to fall back apart and get back down underneath that prior all-time high? In terms of support trendline, we don't oftentimes do this on the Qs, but I would just point out that this is the equivalent of the S&P support trendline. We're well above it. And in terms of the resistance trendline, right, we have something like this. I would say that, if we're going to do that same speculation and just sort of guess where that would be coming into play, you're looking at about 397, let's call it 398, give it again about $1 worth of buffer there at this resistance trendline as a blue sky level resistance area that's coming in from this. It's not like we're just blindly guessing here. That's the number to be paying attention to from a weekly perspective as resistance overhead. Same thing holds true with the volume, slight increase as we made our way into blue sky territory. So the weekly is looking bullish. But again, with all of these, or not all of these, but really just the November 3rd catalyst coming up, you might want to start to be a little bit cautious here at the all-time highs. Let's drill down to the one-day chart and start grabbing some levels which we can trade against. In terms of what's unfolding here, I think this was interesting. If you remember or watched the midweek market update on Wednesday, we were essentially saying that, we knocked on the door here once, twice, inverted hammers. To me, it looked like the market wanted to pull back a little bit and give us some balance. But it didn't happen, right? We already broke that all-time high. So would I be chasing this long here? In my estimation, not really. And again, I hope that was kind of clear in the SPY as well, that I would prefer a little bit of balance. And where would that balance come from? Again, back down underneath this, we're just looking for sideways activity here. That's where those back-to-back inverted hammers were. But in a broader sense, like if we're going to get a little bit more collapse on the FOMC announcement, and again, I'm not predicting that, I'm simply saying if that's the case, then I would say that this is acceptable for sideways consolidation and balance, noting that we have clear sets of lows, a lot of balance already occurring right here between this 377, we'll call it 25 for a round number, and 372.75, okay? 50 SMA will be there to meet us as well as support if the move is lower. If the move is lower. Remember, we're not trying to predict what happens on the FOMC day. We're just being aware and being able to react to it appropriately. Blue sky territory is obviously overhead, and those weekly levels are, the numbers to be paying attention to if there's any sort of massive move that takes us higher. Let's continue on and get into the IWM here, backing it back out to the monthly chart. Here we go. What you would simply notice about this is the monthly bar, not much to read into, but still just overall building this monthly bull flag. And there's a very interesting parallel, which we'll get to when we look at Netflix's chart in just a second here. But obviously, breakout is over the high or breakdown is underneath the lows. Not a whole lot to read into from that perspective. Same thing from the weekly. If we take a look at what's going on here, you can just simply get the sense that we're starting to consolidate into this kind of range like this. The weekly candle structure, it's fine, right? There's a little bit of a lower wick, a little bit of an upper wick. It's really more indecisive, something that would make you question, you're not really sure who's in control. So again, not much to read into, still inside of the overall range. It's been that way for a while. If you check in on volume, though, down below, this week's range actually had more volume than the prior 2 weeks. So that might be something to read into as we're pushing up against this resistance trendline. Now, again, it doesn't just mean blindly, looking for the long here. I'd wait for the break, but, volume is generally a leading indicator of what price may want to do if there's enough momentum there. Let's continue down to the daily, of course, and as we know, really not a whole lot to report on here. Just taking a look at the overall range like this, what I would say is that, again, if you remember in last week's video, we divided this into thirds. So we'll try that one more time. So these aren't the neatest thirds here, but you get the point, right? We're trying to spend more time in section number 1, which is obviously more bullish. Here in number 2, more neutral. And down below in section number 3, it's kind of like look out below if you start spending more time down here, just basically meaning that the buyers don't really have the edge anymore. So the thing I would just pay attention to is the top end of the range. Do we spend more time in section number 1? And if so, is there a larger breakout that could ensue? Remember that I will show you on Netflix in just a second a parallel. But that's really going to wrap up the broad market. Please, if you're going to have any date to watch on your calendar, I hope I've said it enough so far. November 3rd, Wednesday, is the FOMC meeting at 2 p.m. Eastern time. So please be aware of that. Should move the markets in some direction based on the taper announcement. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into Apple, the first thing I would point out about this is that obviously the dividend is around the corner, but earnings, the big thing, are in the past, okay? So a little bit of volatility. I mean, don't get me wrong, big move higher, big gap down, and retracing 100% of that gap. The main reason I'm leaving this chart zoomed out is just so you can see that this breakout point is still an area of contention at 150. You'll notice that we had a prior bull flag building right in here, and then obviously it tried to resolve higher, but now we're stuck back in the flag. Because this was largely due to an earnings gap down and just that gap down from Friday in general, I would say that this is not technically a look above and fail, especially noting that we retraced, filled the gap, and now we're sitting once again at that 150 breakout point. So it's all about 150 here in Apple into the upcoming week. If we go higher, you're simply looking for Thursday's high. That's at 153.13. Then you can walk the levels up, 155, then all-time high after that. If we reject at the 150, I would expect more sideways consolidation in this overall range as the market sort of figures out what wants to happen into that FOMC announcement. Remember that this is largely going to impact tech, which is essentially all of our watch list right in here. So please, play cautiously as November 3rd comes around. It could be a non-event or it could be a huge event. To the downside, we have levels mapped out under 147, which is the low end of the flag consolidation, and 50 SMA. We're looking at 144.50, and then, I would just say for now, I would leave it off here at 141.50 because anything underneath, again, is likely due to a large impact from the November 3rd announcement. Let's continue on to Netflix, and before we go any further, I do want to actually zoom this back out and show you the similarity between this monthly chart and pattern right here in Netflix to what just happened and what we just saw in the IWM. Is IWM going to break out and give us a massive run like what we're seeing here in Netflix? I don't know for sure, but from a pattern perspective, I mean, it looks pretty darn similar. We have over a year of consolidation inside of Netflix where it literally just went sideways inside of this range, and that's exactly what IWM is doing right now. If we get the break, it could, again, we talk in terms of potential here, it could lead to a larger breakout. So it doesn't mean just get long to the gills inside of IWM and small caps in general anticipating the breakout, but if we actually take out the top end of the range, could it go higher? Yes, most definitely, and here's living proof of that pattern panning out. Let's drill back down to the daily and just talk about Netflix from a trade perspective. I mean, obviously this thing has been a beast over the past couple of weeks here. I mean, the pennant pattern that was put in here, only 3 or 4 days of consolidation, big breakout on Friday. I wouldn't chase it here. I'd wait to see if we get any sort of either pullback to retest the breakout point at the 676 mark. If we go any lower, it's probably about the lows of the flag, right? You would want to see it hold on to this here at the 661.50, we'll call it. So those are just areas I would watch out for to the downside. I mean, the chart is overwhelmingly bullish right now. I would try to get in on a risk-friendly pullback instead of just trying to blindly buy the highs up here. Obviously, 700 is a psychological target overhead, and you know the drill. November 3rd will have some impact here if there's any mention of raising rates at any point in time that's sooner than the market anticipates. Downside levels you can look at. This would probably be the next major one to pay attention to. Prior breakout point at the 640 mark. Tesla is up next, and this one I will fully admit that I have gotten wrong a numerous amount of times over the past couple of weeks here. I've been skeptical of this breakout just going here on the first touch. I really would have wanted to see it consolidate, maybe get into the support trendline a couple of times before it went. And again, admittedly, I've been 100% wrong on that. So take my analysis here with a grain of salt. The way I'm treating this one going forward, instead of, again, trying to bias myself or say, I would prefer a pullback this or that, I'm just going to look at levels intraday. Okay, so what I've done is put a couple levels on the 30-minute chart. You can certainly see, obviously, the big gap up from Monday is here, but after that, I'm really just focusing on 1,000, nice round number. This is the low of Wednesday. You can see that we had a perfect run higher and collapsed into the end of the day, but it's supported at that opening sort of level, okay? So that is going to be at 1032, strikes me as important. And then here, it's the Wednesday high, which we used as support into Thursday and a launching pad into Friday. That's at 1065. So just levels I'm paying attention to, but again, I don't really have a thought on, I do have a thought. I would prefer not to have to be a long-sided trader up here. But, if the setup works and there's tight risk, I'd be willing to take it probably with small size. Okay, so that's how I'm thinking about Tesla. I did want to vocalize again and acknowledge that I've been wrong about this one, and that's okay as long as you use, manageable risk here and know your position sizing. So that being said, do with this analysis what you will, but Tesla, those are the numbers I have at least as areas of interest into this upcoming week. Baba, let's go back out to the daily time frame chart. Again, I just want to remind you of the overwhelming downtrend we're in. We'll zoom in a little bit here. Kind of a fake break of the resistance trend line here. However, what I'm maybe not fearful of, but just aware of and kind of watching is you don't want this to turn into a head and shoulders, right? So that would mean that this is the flush point at 162.33. It's also the daily 50 SMA. If it goes lower, that opens the door for much lower to the top of the gap at and around 150, which is a nice psychological number as well. Now, based on Friday's structure, so a little bit of a hammer candle there, the lower wick is slightly longer than the body as well as the upper wick. Maybe it gives us a little bit of bounce, but you can clearly see the major area of resistance is at 170. If we can clear it back into the resistance trend line, and then the next major target is 176.30, then the highs in here. So kind of being cautious on this one. Again, don't want to get wrapped up in something that ends up turning into a head and shoulders, which gives us lower into here to the long side. So be patient, wait for the setup to really confirm what direction it wants to go. Next up, we have Facebook, and Facebook, kind of the wild card. I mean, it's been all over the place over the past couple of weeks. I mean, it looked like it wanted to do the turn higher out of this set of lows in here. Massive gap down with the whole Snap ordeal, right? On its earnings, it obviously went lower. Now it's going back higher. So direction is not abundantly clear to me here inside of Facebook. Want to be transparent with you about that. In terms of levels to pay attention to, watching the 200 SMA, do we firmly resolve it to the upside? Meaning, do we get some breakaway candle here and then we start printing value above the 200 SMA? Or is it the opposite, right? Are we going to chop around, form breakaway value underneath the 200 SMA? Obviously, underneath is bearish, above is more bullish. Let's go ahead and flip to a 30-minute chart here just to check out the pattern that's kind of in play. I think it's interesting that this is kind of a sloppy double bottom, but more importantly, this 316 was the neckline, right? So on any further pullbacks, ideally, if this is going to be an uptrend, if it's going to resolve higher, 316.50 is the number to hold. If we start printing hammer candles down here, indecision doji candles down here, basically things that make you question, is the pullback ending? Can we flip long over these highs? That's the number to watch out for. Obviously, after that, you would want to see it return to the highs it made on Friday, up and around that 326. So we'll see how it unfolds. You have a couple levels to pay attention to, but as of right now, this is the one that I probably have the least confidence in terms of daily direction based on pattern. I mean, if you compare this to like what Netflix was doing, completely different story, and I'm sure you can recognize that as well. Let's get into NVIDIA. Same sort of deal as Tesla there, just moving higher, screaming higher with a big gap up. This one I was more willing to sort of go long with, so I guess, I'm sort of just vocalizing that for the sake of doing it, I suppose. But let's get into the 30-minute, just like we've done in the past. I want to sort of talk about these levels. So obviously the gap up is here. That's from about 239.22 down to 233.50. Be aware of that. The breakout point to me is really the most interesting level from this 30-minute perspective that we can see. That's at 249.50. So on any pullbacks into it, starting to watch out for, again, same thing which we just discussed. Hammer candles that print, indecision doji candles that print, basically things that make you question, is the pullback ending? Can we use this as a new support point, a new higher low, and then make our way higher from there? That's the number to be watching for. Anything underneath, I would expect chop through this range in here, and then a move to the top of the gap to basically give us a little support. A retest, though, would imply that maybe we come down to fill it at the 233.50. So playing this one with caution, just for the same exact reasons as what we've discussed in Tesla. Not so much because we've got it wrong, but just because, it's starting to feel, and again, markets can feel however they want to feel, but getting a little bit again starts to feel like overextended. So please be careful at the highs. There's nothing saying it can't go higher, but just knowing that there is risk of pullback, that would be something you should be aware of. Let's continue on with Microsoft here. And Microsoft is another relative strength monster. Hopefully you can see how Facebook is clearly the laggard in this picture. Same deal. Let's go back out to the 30-minute time frame. You'll just note again that the support trend line is intact, new higher high. Any pullback into it should potentially be viable. Let's get to that 30-minute. And again, you can see how these levels are coming into play. Certainly the gap here, just like we saw in NVIDIA, you can see the pullback low from the consolidation in here is at 322.31, and the breakout point simply here at the 326. Just like we discussed, any pullback here with hammers or indecision dojis that print, basically looking for this to act as newfound support, new higher low. Can we continue higher from there? If not, watching and being patient for chop in here. A breakdown under 322 puts the top of the gap in play and potentially the support trend line. Next up, and lastly, we have Amazon. Let's go back out to the daily because I think this one does merit, again, just like Facebook, a little bit of confusion here. A couple reasons why I think that's the case. Firstly, if we do something like this and call this the overall range, what's the 50% mark? Kind of right in here, right? And that's exactly where we're trading. So as you know, If you've watched the channel for any period of time, your edge really exists here for a breakout or mean reversion, and the same thing but opposite down here at the low. So mean reversion or a breakdown. And in the middle, it's kind of, do we go higher or do we go lower? It's just a big question mark. Overall, the trend is sideways here in Amazon. You can see our 50 SMA was up, now it's down, now it's trying to curl. 200 SMA is overwhelmingly up, but starting to flatten out. So there's really no abundant trend here, especially if we look at it more granularly. Again, in terms of range, here's this range. Where's the 50% mark of that? It's literally exactly where we're trading at right now. So Amazon to me is yet again a bit of a question mark here. Earnings threw this thing for a complete loop. It was down, then it was up, then it was a gap down, but recover. So overall, I don't know what the direction is, but I have the levels to pay attention to. I'm looking at 3,400, 3,453, 3,500 to the upside. To the downside, obviously this 3,310 where we bounced out of from Friday's session is important. The low of day will be as well, but really acceptance under 3,310 puts into play this, and we know that this is a weak support, right? 32.36 is really just a 2-day double bottom. Would expect it to break on a retest, essentially taking us into 31.80. So being open to possibilities here inside of Amazon, the direction isn't abundantly clear based on this chart. Quick reminder to hit the thumbs up button, subscribe to the channel, and hit the bell button as well if you have not done so already. Basically do all of those things that YouTube likes us creators to tell you to do. Regardless, Walmart is the first trade idea. Let's jump right into it. The first thing I would point out is that Walmart is a retailer, so not as sensitive to interest rates as something like tech. That's important for our November, I don't know why I put V, but November 3rd, okay, FOMC date. So that's first of all. Second of all would be that we're already starting to see a nice pattern emerge, a bull flag pattern. And what does that mean about this area right here? It's not as overextended as some of the other things which we've looked at in today's video. So to me, healthy consolidation, not as sensitive to interest rates. If we can get the break of this trend line, then we're looking for higher. Firstly, the pivot highs from in here, 152.50, then all-time high after that. If it wants to remain in the range, so be it. Fine, eventually looking for that breakout, more anticipation, bigger move should generally be how that works. Any breakdown of the support here at 147.45, not interested in the trade, as we would likely see a move to the top of the gap at 143.65. But again, that doesn't mean short it, right? For me, in the face of something like this, doesn't mean short, it would just mean not interested in a long-sided trade. Next up, we have Kroger. Same exact thing is going to apply to this chart as we just discussed with the whole interest rate thing with Walmart. So again, a little bit of confidence in that. Also note that this is not something which has been up over the past 2 weeks. Instead, this is a nice bullish reversal pattern. We have the inverted head and shoulders. Neckline could technically be drawn as the resistance trend line, white dotted there, or just seen as the horizontal level at 40.38. If we take it out looking for a move into 41.61 and daily 50 SMA, that's the blue line here. After that, note that there's not really a whole lot of candle structure here. I'm not advocating that all in one day we do something like this, but maybe over the course of time this happens quicker as opposed to slower. After that, it's all about the bottom end of this range from back in here, the bottom end of this prior bull flag, the failed bull flag at 45.16 as an upside target. That's probably more of a swing, and the day trade would be, okay, this is certainly reasonable for the range of an average day inside of Kroger. Not interested in the trade if we break down underneath the right-hand shoulder at 39.18. Next up, we have Coinbase, and Coinbase is giving us, just like Walmart, but a little bit different, kind of a bull flag, bull pennant here. Obviously, the support trend line is fairly steep. It would be okay if this breaks sideways through time. However, if it wants to just give us the clean break of 327.22, basically these highs right here, then we're looking at the next area of resistance at 350, and then after that, it's all about 380. 380 is the opening print on the IPO day of Coinbase. That's where a lot of people just dump their money into the IPO, right? So if we're below that, a lot of people are not happy. If we're above that, a lot of people are all of a sudden happy. So 380 should be a very important level on this chart if there is going to be a massive breakout higher. Again, if that happens, obviously crypto has been red hot recently with some of the meme coins really running, even Bitcoin hovering up there towards the all-time high. So we'll see if we get follow through from this pattern. Ultimately, on any deeper pullback, you can watch out for this 280 prior breakout point from in here to hold as support. Be on the lookout for hammer candles that print, indecision doji candles that print, basically things that make you question, right? Is this pullback over? Can we flip long and get back into this area here at the 327? That would be a potential trade as well. Underneath, not so interested in anything inside of Coinbase. Next and lastly, we have FUBO for FUBO TV, and this is simply going to be, again, a nice nice instance of a chart that is not overextended right now. Notice that we get this. It's kind of a cup and handle, a little bit sharp to be a cup. Like this is a little bit too V-shaped for me at least, but you know, you could consider it this, or you could simply look at it as a bull flag, something like this, just liking the consolidation under a known breakout point at $30.60. If it breaks, obviously looking for the next daily level, you can see this as well as this here at 34. Anything underneath the flag lows at 28.21, not interested in the trade. Earnings are further out, so not a big deal. Any consolidation that remains inside, again, fine. The longer the consolidation, the more the anticipation should mean a larger breakout, or a quicker breakout rather, as more people who are trapped on the wrong side will likely liquidate that position, okay? So that's how you think about these types of things. Hopefully that little tip was helpful. And just scrunching up the chart, you can see the next major daily resistance would be here, closer to 40 bucks. Again, am I saying that this happens in a week? Absolutely not, but from a structural standpoint, that is the number to be watching. That's really going to wrap up the video. Again, I hope you enjoy your Halloween, whether or not it's with kids, whether or not it's without kids, and you just lock yourself in your house, you enjoy a movie and TV. I really do hope you enjoy the Halloween holiday. That being said, I also hope you enjoy the upcoming trading week. Stay green out there, and again, please be aware of November 3rd. That's going to wrap up the video. Hope to see you in the next one.